Resource Watch is brought to you in association with Tebe Investment Corporation.
Hello and welcome. Now, given South Africa's electricity shortages and Eskom's inability to produce enough power, we're looking at how independent producers and renewables can play their role. I'm Nozipho Mbanjwa and this is Resource Watch. Let's kick off with the market wrap for this week.
Anglo-Australian miner BHP Billiton will slow its planned expansion in iron ore production in a bid to conserve cash. This in response to the slumping commodity prices and weakening demand. It says it will defer spending at its main port in Western Australia, making it the first big miner to delay a planned output expansion. DRD Gold has turned a profit in the first 9 months of its financial year, as gold production grew by 11% and costs shrank. DRD Gold, which treats old mine dumps around Johannesburg to extract gold, reported net profit of 7.8 million rand in the 9 months to end March, compared with the loss of 42 million rand in the same period a year ago. Northern Platinum says the initial stages of its planned purchase of Everest mining assets had become unconditional, and the acquisition would take place on June 26th for 400 million rand cash. This will help Northern develop its Booysendal operation.
Now, South Africa's Department of Energy is expanding opportunities for the private sector to contribute to the production of power in the country. I'm joined now in studio by Linda Mabhena-Olagunju. She's an independent power producer, and Zahid Sibda, he's the managing director of Fieldstone, an advisor to IPPs. Welcome and thank you for making the time to join us. Now, we know that the Department of Energy has recently announced the 4th round. Linda, is it time for us to bring out the confetti and celebrate, or are there challenges that we still need to be looking into?
I think it's fantastic that we've reached the 4th bidding round in this IPP program. It's voted amongst the top 10 for investment in the world, so it is a good program. There's a lot to celebrate, I guess, from a consumer perspective that the prices have declined. I think it's also important to bear in mind what the implications are for a price decrease from an investor side, especially as a black developer playing in the space.
Let's go into that decreased tariff and what it means for investors and players who are wishing to contribute to the bid. Does it significantly take away appetite to participate?
I think there is still appetite to participate in the renewables energy program, but it just changes the nature of how you bid, and obviously it means lower margins for profit for investors. And I think for me as a black developer, what's very important is, you know, if anything goes wrong in the projects, there needs to be buffers, and the most people who are affected are usually the black developers or BE parties.
Linda, you raise an important point, and we'll get back to some of the pertinent issues that pertain to black producers in particular. But before we do that, let's get the perspective from the advisory point of view. And Zahid, give us a sense whether you think that the balance has been struck between dropping the tariffs to conform to the developmental mandate, whilst at the same time keeping them high enough so that the participation from investors remains intact.
Thanks. I think the first step that we need to go back to is we have to congratulate the department. They've expanded the program and they've allowed extra allocation, and they've confirmed the ongoing participation of an additional 6,800 megawatts. From round 1 to round 4, tariffs have come down significantly, 76% on average. And the department has recognized that in round 5, that we need to restrike the balance purely because tariffs have come down. Going forward, they will be looking at ED, local scoring and local participation. And going forward into the future, maybe factoring in further industrialization of the renewable program will be some of the thoughts that they will bring to market.
We'll talk a little bit about that, but I want to go back to the point that Linda raised and maybe get you to respond to it. She said that because the tariffs have come lower, producers have to bid differently, and there need to be buffers in place to ensure that even in that different bidding, there's still a sense of comfortability with the margins. What are you advising independent producers who want to get onto the grid at this lower tariff structure?
Well, I think the first thing is to be innovative, to look at innovative funding structures. There are certain big players in the market that looked at different funding models. So if you look at round 1 and round 2, predominantly project finance was the key mechanism of entry into the market from a financing perspective. And also banks in round and lenders in round 1, the risk perspective was totally unique to South African lenders. Coming to round 3 and 4, the risk appetite has increased, so prices have come down, and also innovative structures have come to market. So you've got different type of funding mixtures, corporate financing, different types of debt mixes have been put to the market, which has all been beneficial because we have a greater understanding and knowledge. And going to Linda's specific question on BEE funding, in round 1 and round 2, and predominantly round 3, IDC, DBSA were predominant funders of BEE financing and community funding. We've seen that commercial banks have come to the market in this respect, and we applaud the government for being the catalyst through IDC and DBSA, and the commercial banks have come on stream as well.
So you've touched on the point of development finance institutions, and Linda, let's get back into that and let's put back your question around the funding needs that black producers need. Have development finance institutions stepped up to the plate sufficiently, or are there spaces and gaps that still could be filled to allow a bigger pool and a deeper pool of funding for black producers?
I think it wouldn't be unfair to expect all the burden to rest on DFIs. IDC, DBSA and the PIC recently have come on board, and they've lended their support to black developers in this space. However, one thing that many people don't know is that the funding that you receive from a DFI is not 100% when you're a Black Economic Empowerment Party. It's the communities that are funded 100% typically. So you still need to raise the shortfall of the capital, which can vary depending on what's been agreed. So sometimes it's 10%, sometimes it's more than 10%. And the key issue there is that because of the capital costs of these projects, that 10% deficit isn't a small amount, especially for new black entrepreneurs entering the space. So I do think there needs to be an additional fund, or not necessarily from the DFIs. I think this is a space that other commercial funders or other funders can come and play into. I think we need to look at how BE is funded generally, and I think someone like Zahid has more access and exposure to this type of funding to understand that there's a need for an improvement.
So you've identified a gap, and in particular she speaks about the shortfall, but what about the cost of capital? I mean, DFIs are very welcome in the sense that they increase the capital available, but does it make it necessarily more expensive for black players to participate?
It doesn't make it more expensive because the development finance institutions or commercial banks, depending on the package and the client and the structure of the project, would look at each one favorably from a risk perspective. What Linda alludes to is about how can we get a deeper, broad-based black economic empowerment to participate in the program. Considering that another 6,000 megawatts and more would be allocated by the government, it's now for generally government institutions look at how we broaden this pool of funding. So it is a challenge, and obviously with the decreasing in pricing, we need to balance the returns and look at different pools of capital that we can bring to market for entrepreneurs who want to participate in the program.
Now, Linda, one of the things that Zahid said early on, he spoke about congratulating the department for expanding the program. Have we seen this expansion extend beyond renewables to other sources of energy? And from where you sit, do you see increasing scope to move in that direction?
Definitely, he is right in terms of the expansion across technologies as well. So the renewables IPP program was the first successful IPP program this country has had, but now government is also looking at base load capacity. So we're looking at coal, we're also looking at gas program, nuclear, as you would have heard, cogeneration, also renewables on a small scale. So the Department of Energy has really put in efforts to address the energy issues in South Africa holistically. And I think from that perspective, there's a lot of room for investment. One is also there's a lot of room for capacity building to be supplied. However, again, the key thing is about how South Africans are going to play in that space. In the coal program, for example, you've seen an increase in the percentage that needs to be South African owned, which is now 51%. Of that, 30% or thereabout needs to be in black hands in a coal build program. Now, again, the issue becomes of where do we get the funding to participate at those levels if you're going to diversify the players in this sector.
So it certainly sounds like it is a perfect move by the department in terms of expanding the program, but there are challenges, and we have had voices in studio giving us a sense of how we could better navigate these. A very big thank you to my guests. That's Linda Mabhena-Olagunju. She's an independent power producer, and Zahid Sibda, he's the managing director of Fieldstone, and that's an advisor to IPPs. And now here's our gem of the week.
Medupi. This is one of two of Eskom's long-delayed coal-fire power plants. Together with Kusile, they're expected to add a combined 9,000 megawatts to South Africa's strained electricity grid. Medupi is about 5 years behind schedule as a result of labour strife and problems with contractors. Its first unit recently came online. Eskom now says Kusile and Medupi are expected to be fully operational only in 2021. And the utility says it will embark on what it calls a massive maintenance festival this long weekend. South Africans have been experiencing regular load shedding since the beginning of this year due to technical breakdowns and because extensive maintenance work needs to be done. Eskom's power system is old and requires ongoing maintenance, but the utility is currently experiencing a major backlog.
And that's it for this week's show. Thank you for watching. Do stay in touch. That's by following me on Twitter at @TheRealNozi, and of course using our hashtag, which is ResourceWatch. Until next time, it's goodbye.